Welcome to the tutorial on Managerial Accounting, Introductory Chapter, Overview Chapter. Definition of Managerial Accounting. Managerial Accounting is concerned with providing information to the managers, especially the internal managers, for use within the organization. Here, the internal managers means the accounting manager, finance manager, marketing manager, brand manager, HRM manager, supply chain manager, etc. Managerial accounting is a tool for planning, controlling and decision making by the internal managers. Fundamental difference between financial and managerial accounting. We can see the differences between the financial accounting and managerial accounting. If we consider the legal requirement, this financial accounting is mandatory to prepare, but the managerial accounting is not mandatory to prepare. That means, considering the legal requirements, all the publicly listed companies are bound to prepare reports for the outside stakeholders, as for example, owners, creditors, tax authorities, regulatory agencies, etc. But the managerial accounting is not mandatory, but it is prepared by the internal managers for their planning, controlling and decision making. Financial accounting emphasizes financial consequences of past activities. On the other hand, managerial accounting emphasizes decisions affecting the future. Financial accounting emphasizes objectivity and verifiability. On the other hand, managerial accounting emphasizes relevance. Whenever you are taking any decision, what is relevant? Are you going to maximize the profit or minimizing the cost? That type of relevance should be emphasized by the measurement by managerial accounting. Financial accounting emphasizes precision. On the other hand, managerial accounting emphasizes timeliness. You have to provide the timely information for decision making by the managers. Financial accounting emphasizes company-wide reports. On the other hand, managerial accounting emphasizes segment reports. That means financial accounting provide overall company reports. On the other hand, managerial accounting provide segment reports. Since financial accounting is mandatory considering the legal requirement, that's why this financial accounting must follow GAAP, Generally Accepted Accounting Principles, or IFRS, International Financial Reporting Standard. On the other hand, in managerial accounting, it is not necessary to follow the GAAP or IFRS. And initially I have said that financial accounting is mandatory for the external reports. On the other hand, managerial accounting is not mandatory, but it is prepared by the managers for the purpose of planning, controlling and decision making. As we have learned in the previous slide that managerial accounting helps managers perform three vital activities, that are planning, controlling and decision making. In planning, we have to establish the goals. Then we have to specify how to achieve those goals. That means in the first stage of planning, the managers should establish the goals. Then they should specify how the goals will be achieved. Then there should be budgets. Budget is a quantitative form of planning. In the budgets, we plan using the numbers, or in budget, we show the plan in quantitative form. For the purpose of controlling, the managers need to gather the feedback to ensure that the plan is being properly executed or modified as circumstances change. Feedback in the form of performance reports that compares actual results with the budget are an essential part of the control function. That means in the controlling activities, the managers compare the actual results with the budget. For that purpose, we will prepare standard costing and flexible budget to compare the performance, and the results from this comparing can be used as a feedback to evaluate whether the plan of the organization is being properly executed or not. In decision making, the managers select a course of action from competing alternatives. As a manager, we may face various types of alternatives. In that case, as a manager, we need to select the best alternative from the available alternatives. And in this decision making, we may need to decide various issues like what should we be selling, what should we be serving, and how should we execute. So these are the some examples of decision making. Why does managerial accounting matter to your career? Managerial accounting skills are useful in just about any career, any organization, any industry. Any career means, suppose you may be the accounts manager or finance manager or marketing manager or HRM manager or supply chain manager, whatever your career, you can apply the managerial accounting skills for your planning, controlling and decision making. And whatever be the organization you will serve as a manager or a owner, you can apply these managerial accounting skills in your decision making. Whatever be the industry you will serve as a manager, as a director, you can apply these managerial accounting skills. That means the skills of managerial accounting is very useful for any career, any organization and any industry. That's why if you commit energy to this course, you will be making a smart investment in your future, even though you can't clearly envision it. Maybe you are thinking that managerial accounting, the word accounting is here. That means this course may be useful for the accounts manager. No, it's not correct. Practically, these managerial accounting skills can be applied by any managers. It may be marketing managers, supply chain manager, HRM manager, or any manager. Here some examples from which we can learn that these managerial accounting skills can be applied by any types of manager. Here we can see as a marketing manager, you can apply the managerial accounting skills in planning. Like suppose you are planning for advertising, what would be the budget? And this budget can be learned from the managerial accounting. Suppose as a marketing manager, you are planning to hire salespeople. In that case, how many salespeople you need to hire? That type of decision can be taken by the help of managerial accounting skills. As a marketing manager, you can plan by taking help from the skills of managerial accounting. On the other hand, in the controlling purpose, as a marketing manager, you may decide about is the budgeted price cut increasing unit sales as expected. That means that type of controlling can be done by managerial accounting. As well as we can see, are we accumulating too much inventory during the holiday shopping season? If you want to take that type of controlling decision, you need to apply the managerial accounting skills. In case of decision making, as a marketing manager, you can decide should we sell our services as one bundle or sell them separately. As well as you can decide should we sell directly to customers or use a distributor. In that case, in all the situations, you need to do managerial calculation, you need to calculate the costing, you need to determine the profitability, then you can decide what you can do as a marketing manager. Suppose you are the supply chain manager. As a supply chain manager, how can you apply the managerial accounting skills? You can apply these managerial accounting skills in your supply chain planning, controlling and decision making. As for example, in case of planning, how many units should we plan to produce next period? In that type of planning, you can use your managerial accounting skills. You can forecast how many productions you need to do, and for that purpose, how to sourcing the materials for that production. As well as we can see how much should we budget for next period's utility expense. In case of controlling, as a supply chain manager, you can take decision on did we spend more or less than expected for the units we actually produced. That means one kind of controlling as a supply chain manager. Are we achieving our goal of reducing the number of defective units produced? And in case of decision making, you can take decision as a supply chain manager about should we transfer production of a component part to an overseas supplier. That means do you need to import any component of the product from the outside supplier? As well as we can see, should we redesign our manufacturing process to lower inventory levels? So these are the decisions you can take as a supply chain manager by applying the managerial accounting skills. Suppose you are the human resource manager. As a human resource manager, you can plan how much should we plan to spend for occupational safety training, and how much should we plan to spend on employee recruitment advertising. That means for the purpose of planning as a human resource manager, you can apply the managerial accounting skills. That means you can plan or you can prepare your budget for your human resource management, and budgeting for that purpose can be learned from this managerial accounting course. On the other hand, in controlling as a human resource management, you can decide, is our employee retention rate exceeding our goals, and are we meeting our goal of completing timely performance appraisals? So these are the controlling techniques you can learn from these managerial accounting tools. On the other hand, in decision making, you can decide, should we hire an on-site medical staff to lower our healthcare cost? As well as you can decide, should we hire temporary workers or full-time employees? So these are the decision or controlling or planning techniques you can learn from the managerial accounting tools as a human resource manager. If you learn this managerial accounting course, you can apply your knowledge in any career. Suppose you are the branding manager or sales manager or purchase manager or any manager, you can apply this managerial accounting tools. Managerial accounting beyond the numbers. The primary purpose of this managerial accounting course is to teach you the measurement skills that the managers use to support planning, controlling and decision making activities. That means as a manager, you may need to do various types of calculation or measurement, and measurement will help you to get answers for important questions. But this question will focus that as a manager, you may need to focus on other issues that are beyond the numbers or beyond the measurement skills. As a manager, we apply various types of measurement skills to answer various types of questions. These are the questions we can answer by doing measurement. And in this course, we are going to learn these types of measurement skills. Here we can see managerial accounting and cost concept. From this chapter, you will learn measurement skills by which you can answer what cost classifications do I use for different management purposes. And we can see we will learn cost, volume, profit, relationships. It's another chapter. From this chapter, we will learn the measurement skill by which we can answer how will my profits change if I change my selling price, sales, volume or cost. We will also learn the chapter variable costing and segment reporting tools for management. From this chapter, the skills of measurement can be used for the question how should the income statement be presented. And from the master budgeting chapter, we can learn the measurement skills by which we can answer how should I create a financial plan for the next year. That means from this chapter, master budgeting, you can prepare a financial plan for your organization. And from the chapter flexible budgets and performance analysis and the chapter standard cost and variances, from these two chapters you can learn the measurement skills by which you can answer how well am I performing relative to my plan. And very important chapter, differential analysis, the key to decision making. From this chapter you can learn the measurement skills by which you can decide how do I quantify the financial impact of pursuing one course of action versus another. So these are the questions we can answer by learning the various chapters of managerial accounting for measurement skills. But as a manager, you have to think beyond the numbers or beyond the measurement. In the next slide, we will learn what type of issues we also need to consider beyond these types of calculation. In the previous slide, we have learned that in this managerial accounting course, we will learn various chapters by which we will acquire measurement skills. I mean, we will be able to use numbers, but as a manager, you need to consider some perspective that are beyond the numbers. The 6 business management perspectives are ethics perspective, strategic management perspective, enterprise risk management perspective, corporate social responsibility perspective, process management perspective, leadership perspective. So these are the 6 perspectives we need to consider besides the measurement skills of managerial accounting. And ethics perspective, the Institute of Management Accountants Statement of Ethical Professional Practice provides guidelines for ethical behavior. Under the guideline, a manager should be competent enough about the related laws and regulation. He should have the professional competence, and for that purpose he should have required knowledge, skills and attitude. The managers who are competent will be able to recognize and communicate professional limitations that preclude responsible judgment. A competent manager will be able to maintain professional competence. He or she will be able to follow applicable laws, regulations and standards, as well as you will be able to provide accurate, clear, concise and timely decision support information. Under the ethics perspective, a manager should maintain the confidentiality. He should not disclose confidential information unless legally obligated to do so. The manager should not use confidential information for unethical or illegal advantage, as well as he should ensure that subordinates do not disclose confidential information. Under the ethics perspective, a manager should have integrity to mitigate the conflicts of interest and advise others of potential conflicts. Integrity can be used to refrain from conduct that would prejudice carrying out duties ethically, as well as the manager should abstain from activities that might discredit the profession. And under the ethics perspective, the manager should have the credibility. In that case, he should communicate information fairly and objectively. He should disclose delays or deficiencies in information timeliness, processing, or internal controls. He should disclose all relevant information that could influence a user's understanding of reports and recommendations. Institute of Management Accountants also provided guidelines for resolution of an ethical conflict. If there is any ethical conflict, the managers should follow the employer's established policies. But if the policies doesn't work, in that case he can consider the following issues, like he can discuss the conflict with the immediate supervisor or next highest uninvolved managerial level. If the immediate supervisor is the chief executive officer, consider the board of directors or the audit committee. Contact with levels above the immediate supervisor should only be initiated with the supervisor's knowledge, assuming the supervisor is not involved. To minimize the ethical conflict or to solve the ethical conflict, you can also consider the additional practices like accept where legally prescribed, maintain confidentiality, clarify issues in a confidential discussion with an objective advisor, consult an attorney as to legal obligations. The second perspective is strategic management perspective. The strategy is a game plan that enables a company to attract customers by distinguishing itself from the competitors. The focal point of the company's strategy should be its target customers. Whenever you need to attract the customers, you need to invent strategy that will focus on the needs of the customers, by which you can achieve competitive advantage to attract the customers. Here we can see some strategy. You can apply customer intimacy strategy, operational excellence strategy, product leadership strategy. In case of customer intimacy strategy, you need to understand and respond to the individual customer needs. And in case of operational excellence strategy, you need to deliver products and services faster, more conveniently, and at lower prices. And in case of product leadership strategy, you can offer higher quality products. So these are the some example of strategic management perspective. The next perspective is enterprise risk management perspective. Risk management perspective is a process used by a company to proactively identify and manage risk. As a manager, you can avoid the risk, or you can accept the risk, or you can reduce the risk. Once the company identifies its risk, perhaps the most common risk management technique is to reduce risk by implementing specific controls. The next perspective is corporate social responsibility perspective. The corporate social responsibility, the CSR, is a concept in which the organizations consider the needs of all the stakeholders when making decisions. Here we can see customers, employees, suppliers, communities, stockholders, environmental and human rights advocates. So these are the some stakeholders. As a manager, you need to consider the needs of all stakeholders while making decisions. And as a manager, if you can ensure the corporate social responsibility, you can achieve the sustainability. We can see another perspective, process management perspective. A business process is a series of steps or activities that are followed in order to carry out some task in a business. Whenever you are selling something or you are serving, you have to follow a series of steps or activities. Those series of steps or activities or functions are known as value chain. Here we can see whenever you are doing a business or whenever you are producing a product or service, you can start the idea from the research and development, R&D activities, R&D functions. Then you need to design the product, then you need to produce or manufacture, then marketing, distribution, after that customer service. So these are the series of steps. As a manager, you need to consider all the issues while taking decisions. In process management perspective, traditionally we were accustomed to produce goods in anticipation of sales. Then we store the inventory. After that, we make sales from finished goods inventory. These are the traditional manufacturing scenario. But in the present scenario, we apply lean production or just-in-time JIT production, because this lean thinking only allows production in response to the customer orders. The number of units produced tends to equal the number of units sold. That means traditionally we were accustomed to produce lots of products, then we were used to store the inventory. After that, we make sales from the finished goods inventory or from the godown. Nowadays, under the just-in-time production, customer places the order. After that, the company create production order. Then the storekeeper generate component requirements. I mean, he provides the requisition for the materials. After that, the components are ordered by the purchase manager. After that, the production manager start the production when the materials are arrived. After that, goods delivered when the customers need the product. In this way, we can minimize costing. That's why lean production or just-in-time production is a modern technique. The last perspective is leadership perspective. Organizational leaders unite the behavior of employees around two common themes: pursuing the strategic goals and making optimal decisions. And whenever you are influencing the behavior, there are some factors which influence your decision, which are intrinsic motivation, extrinsic incentives, and cognitive bias. However, to be a successful manager, you need to consider all the 6 perspectives beyond your numbers. I mean, from this course, you will learn measurement skills. But to be a successful manager, you need to also consider the 6 perspectives. In summary, we can say that managerial accounting is very helpful for the internal managers for planning, controlling, and decision making. And as a manager, you need to consider the 6 perspectives beyond the measurement skills, which will be learned from this course. In this course, we will learn some measurement skills like budgeting, cost, profit, volume, relationships, standard costing, flexible budgeting, differential analysis. So these are the measurement skills we will learn from this course. Thank you.